Hello, good morning, good afternoon, ladies and gentlemen. Welcome to our live trading with Trading to Win, with a Trading to Win team, with TTW, Trader and Bookmap. I ask you kindly to excuse me, mute your microphone. So I'm broadcasting on Discord. I hope you can hear me there. Just okay. Okay. And then I hope everything is kind. So just looking for the technique here, and welcome here on YouTube as well as every Thursday, ladies and gentlemen. So let's see what's in for us today here in live trading. So join me, discuss with me the next one and a half hour, and then let's see where we can find nice trades. By the way. And then enjoy it. Let's see what we can do here. Great. Okay, ladies and gentlemen. So my levels for today are, of course, where the price right now is 37.17, and look at the gap at 37.93. I've gotten. Can you hear me? Yes, I think so. So everything is fine. Definitely. I can't mute my. I don't know where it comes from. Okay, can you hear me still? Can you hear me, ladies and gentlemen, on Discord? Can you hear me? 1, 2, 1, 2. Okay, go ahead. I'm okay. Thank you, Philip. Thank you. Okay, now I was watching this levels here, 37.70, and my next level is what I'm watching is 37.94. That's the gap. You see, this is the range where the market might trade around here for the beginning or at the beginning. The numbers are a little bit more weaker. The jobless numbers are a little bit more weaker than expected. But as you know, the expectation of the market is if the market get let me say weak numbers or bad numbers, that would be good. That would be fine for the market, because then the market expects not the next Fed meeting, FOMC meeting in December. They will not raise the rates very much, maybe even not. So the expectation is still 0.50, 0.5%, as you can see on my daily prep work on Discord. Please see the CME page, which is quite interesting to watch and to see, and to see what the bets are about the next FOMC meeting, which is in December, which will take place in December. So market will open. Oh, the market is open. So sorry for that. The market is open, and as it turned out, the 78 was a nice long position. I'm working, by the way, guys, I'm working with the newest beta TradeFinder 3.6. We did a great work with TradeFinder 3.6. We can find, and we find sell stop runs, buy stop runs, sell stop runs. We have added an additional feature which is called stop volume signal. Stop volume signal. It's different than the market volume stop. And we added then the sell stop run and buy stop run here as well. We have rewritten all the TradeFinder completely, and so stay tuned. It will hopefully be hopefully it will be released next week. So we are just cleaning up the code, cleaning up some bugs which are still in. Then we have friends which will get the beta just to test for a few days, and then we will go online and we will go public with TradeFinder 3.6. It's amazing work, and we did a lot of effort to protect our intellectual property, to protect our code, to protect our software, because we see that we have been copied, or we are copied. Yeah, and that's okay, that's fine. So you see how important, how good we are. But on the other side, it's always a little bit more annoying if you see your ideas coming true with other software which are using the same, or not the same code, but the same ideas. As you can see, that was an institutional level here as well. We have had a nice stop run here at that time, not what it is, 9:23 Eastern time here, and it means 441 contracts have been traded here through 6 ticks in this case, because it's the ES, and 84 order IDs have been executed or transacted to finish or to hit this 441 contracts. That's quite amazing. We will do a lot of this. We will do, of course, a comprehensive description, and we started a new wiki on our page, on our website, and still please be tuned, because it takes time to complete all this work. That's something we need time to describe it, to public it, to give you, to make the videos, of course, to show you on YouTube, on all the social medias we have, what we have done. And now is still freezing. I'm detecting a delay of 80 seconds in Rithmic. That wasn't, oh gosh, that's really bad. That's really bad on my side. 70-80 seconds, that's really not good. So I'm not sure if I've expected this delays the last days. I can't remember, to be honest, but it happens. 80 seconds, it's simply too much. So my interactive brokers DWS is showing 3790 as well, dxFeed, but Rithmic is lagging. It's lagging, you know, you see here. Anyway, my first idea when I started this live trading here was to go long here at this level, and institutional level here, very precisely. It comes together with a sell stop run, which is described by this description here. How many contracts have been traded into this area, into say 78 and 25, 78 and 1/4. And then it was the idea to buy into the gap, to the gap area, which is 94, 95, 96 here. So if you have questions, go ahead. I will try to answer your questions. Stay curious, stay open for everything which can bring you a certain advantage for your trading. And of course, ladies and gentlemen, what we are saying, what I'm saying all the time, TradeFinder is there to give you security, to give you the best possible security in trading. And what we do here is, excuse me, I have to switch off. To give you the best possible security and confidence in your trading, in your trading. And that's what we aim, because we are developing TradeFinder for ourselves. So we are trading for ourselves with TradeFinder and Bookmap, and we are sharing our knowledge with you. If you are open, stay curious, because you can learn a lot of. Be patient. There's nothing you can do in 1 hour. And what I see here, it's simply embarrassing. 96% delay in Rithmic. That's simply embarrassing. Okay, so I'm trying to comment. I will comment, and I will try to find a trade if possible. So you see these volume stops here. You see these volume stops. They are different. There is a difference between market volume stops and volume stops we implemented. I've received this release yesterday, and therefore I can't say really or go in depth right now. It's only few hours I have worked with. I have made my changes here for ES and the dxFeed and so on, but I'm not done with other instruments I have here on my chart, YM, NQ and so on. So I will do that the next hours, the next days. These are volume stops. They are generated stop volume signal, and this is totally different from the market volume stop. Market volume stop is the accumulation of volume. It shows exhaustion. It's the highest possible volume in the market, but we split our analysis between stop volume signals, and of course stop run signals. Stay tuned. Give me a little bit time. Give me a bit time to collect all information, and then I will pass it to you. We will go through you will find it a wiki, and I will make some videos on top, of course. And what I see here, it's really embarrassing. I can't trade with this delay here, 40 seconds. That's really something which is totally off. My dxFeed is faster, of course, and I'm not sure what this is about here. Anyway, we have had, and now it's coming up here, buy, stop, run here. But you know, I'm reading 97, 96, my TWS is still at 98, so there's a difference here. I'm very cautious with, I'm watching in parallel to my, at my dxFeed chart. And as well, the upper level limit, the upper level is 38.16, 38.19, 38.16, 38.19. So 38, 30.19. So we will see how that will evolve here, what happens. So the delay is coming back here. That's a positive message, but the market is still bullish. The market is bullish, and we will see 38.19. If you use the institutional levels 38.19 to 38.20, then mark them. Please use if you are using TradeFinder, you have a very nice gadget here to mark the levels and to keep you informed when the market is trading against this level here. Interestingly, the data latency is back hopefully to 0. And as mentioned, that was a very nice long position at 3780, excuse me. You see a lot of stop runs here. When you see the stop run, that's always an excellent signal to go against or to wait. Draw a line if you're not sure where this happens. We have discussed it, I think, the last time. And then you will have an guidance, let me say, guidance of about what to expect if the price goes back. So take the breakout here of the 88, whatever, 25, even, whatever, go along here. So let me focus on what the market is doing. I was a little bit nervous, but because 90 seconds, that's nothing I would like to see on my charts here. And by the way, don't mind the settings here. I'm not finished with the settings here, so sorry guys. I haven't had the time really to, after all these discussions and preparations we are doing with the TradeFinder new release, I haven't had the time to adjust everything properly as I would like it, and to make it a little bit more clean on the chart. So simply watch what is coming next. It will be released, I'm sure, next week. Give us a little bit more time. It's to clean the code, to fix the small bugs here, and then it will be released very, very soon, next week. We will discuss all this fine market stuff with stop runs and volume stops and so on in detail. Take your time and research on your own. That will make you not only happy, but you will see how beautiful the system is and how beautiful the system works. By the way, we have an internal title, and it's called Scalper's Paradise. So we have for this release the internal name and internal title Scalper's Paradise, because you can scalp if you watch this volume stops here. If you're a scalper, you will scalp few ticks. There are some they're not working here, maybe one or two, but the majority of the volume stops, the smaller ones, will work really precisely. And with a high probability, by the way. That's a point I must mention, because we are dealing with probabilities here, and don't be surprised if something does not work. That's not an holy grail here. There's no holy grail out there. So be sure that you learn and understand what all this market information is about. So just to clean off a little bit my charts here. I'm sorry for that. I didn't have simply the time to do so. I know I know how eager you are, and we are as well, to to work with a new version, which took a lot of time because, as I mentioned, it is rewritten totally. As you can see, by the way, here you will receive only one jar file. Everything is in this jar file. You don't need to add 5 add-ons. It will be added, or it is incorporated in one file, which makes the installation really, really easy. So let's focus on trading. We have the first 20 minutes, and what I mentioned is I mentioned that the market is bullish, trading towards the gap, which was 94, and now we have on a really crucial level at 38.19. Someone asked on Discord if spot gamma is helpful. You know, it depends on you. What you expect. What is your expectation? How good do you understand options? And as everything in the market, if you are trading options or futures or shares, no one can predict the future. So the option community must hedge, or will, yes, must hedge, and to protect their how to say, not inventories, but to protect their money. And look here, I have still a delay here. That's really I saw the discussion in Discord because of those delays, but that's really something which is not desirable, because trading off the chart is not possible in this way. So I'm TWS 97 even, still 96 here. Not sure what's right here. I believe in my TWS here. Testing the gap. So the market tests the gap here, and still 38.20 is luring here. It's not off. It's not off the table. It's not. It is not the liquidity here at which is 433 contracts at 38.20 is not cancelled. We have a good liquidity at 37.75 with 514 contracts at the moment here in this area. And on the upside we have 431 and 38.20. Now the delay is gone. Maybe they need another leg down here, a swing down, to find new buyers and to drive the price up here. That's a little nice helper. So if you are not sure about the entries, take your time. Last time we talked, I think last time we talked about aggressive trading and conservative trading. So conservative means take your time, wait until the market offers you something, and then take action on that, what the market is offering. And that's really the best helpful situation. What we saw here is simply an exhaustion at that point. The market is always swinging a little bit beyond or above those points. Keep that in mind. It happens because yes, some traders don't realize what is really happening here. The high volume was traded here, and then they go down with low volume. We talk as well about divergences. So there's the one divergence, the second one. So you see how you can manage this kind of areas as well if you are waiting for a conservative entry here. On all my charts, what I have here, I see more sideways action today. So there's the yes is a little bit, it seems it's bullish. It seems it is bullish. Yes, it is. They're trying to, yes, to buy. They're trying to buy, to lift the offer above 3,800. It might happen. Remember yesterday, so far I saw it was, they break down on 3,800 and then they crossed 3,800. They bought everything above 3,800. And now on my charts, it's really not determined. That means I don't see any clear direction right now. If you're a scalper, you will use, if you're a scalper and you understand what's behind the volume stops here, this matters here. It's not a volume stop run, it's a volume stop here as well here. You can scalp, so you will get a lot of good signals, high probability signals, which gives you the opportunity to scalp. That was an buy stop run. I apologize for my bad organization here on my chart. I need to that's simply because it's very new and everything is new here, the new code, everything, and that means it must be adjusted. Signals sometimes are overlapping. That was a very nice sell as well, 05. So buy stop run means here at 425, 4.25, 38 or 4.25, 344 contracts have been traded. They traded through 5 ticks and 20 order IDs were responsible for this, for the execution of 344 contracts. You see, that's what I meant. It looks bullish. It looks really bullish. So, but don't fall in love with the bullish stance at the moment. I see on my charts here and what I have around myself, it is more a sideways way. It's not, the market is not happy with 3800 for some reasons. Maybe that will change during the trading day, along the trading day, but at the moment we don't, the market is not happy. It's not happy about 3800 or this region here. Yes, of these levels here. We have 3820, which is coming in here, gamma. Institutional levels as well here. Liquidity with 456 contracts on 3820. So far you see the signals, the volume stop here, the volume stop here, and well here, perfect. As I mentioned, scalper's paradise. You know, that's always the art of trading, and seeing the entry levels or levels of interest, of course, levels of interest, and then understanding what the market is doing, where the market is traded or trading, excuse me, where the market is trading or most likely will trade. What is the mood of the market at the moment? That's something we should keep in mind or should understand, and that's market reading, and then finding good positions, entry positions, of course. I must say I'm sorry, but that sucks really here. This is, the delay is quite too high. Even a few seconds, it's really bad. Attracted by 37.75. Market seems to be attracted by 37.75. High volume was traded here at that point. Now we have a really negative stance. So if the market breaks back or pulls back here, I will look for sell if I get a chance. It seems 70.75 is still the attraction. Oh, that's interesting. Look here. This is an dynamic iceberg, which comes in here at 37.80. Big one. seeks to be filled here. $2,200 in contracts. 2,200 in contracts have been executed or transacted here so far. That's quite interesting. That going into 75 here with a sell stop run here. Question is what to do with these delays here. That's really, that's a mess. So I have my dxFeed screen, or dxFeed chart, excuse me, dxFeed chart on my screen on to the right, and I'm watching dxFeed because there are no delays so far. At least to understand what the price is doing here. That's as well an important level at 3765 here. That was the it was the low of the day, yeah, pre-low. Yeah, it was pre-session low was 3765, 64 here. That's the area. Therefore, keep that in mind. If the market comes down here into 3765. Then that might be a kind of support here. However, the market traded into 75, then we have a liquidity above. That means this liquidity acts as a resistance at the moment. So if they don't find enough enough buyers to trade through this ceiling here, then it is. And watch here what happens at 3766 here in that area. Someone added liquidity at 66 here. That's remarkable. That time here. very nice dynamic iceberg here, which was the order ID was placed here at that time, at that level. Let me, you see, have to that was placed 3 minutes before at 69, and that's where they have executed that. You know, we have, I think I'm talking about icebergs, and if you go to TTW-Trader.com, we have a video section there. And you will find some videos about icebergs and imbalances and so on. Please take your time and go through if you are interested, because this is, first of all, good to know and important to know, because imbalances are all as a widespread in the professional industry. Look here, we have an imbalance line here. It's pointing down, it's pointing down, it's pointing down. That means the market is on the liquidity, so excuse me, the liquidity is on the bid, and if the liquidity is on the bid, that market will most probably trade on the bid. That means if it trades on the bid or hits the bid, then that means the market will trade down, the price will fall. In opposite, if it's above zero line here, it will turn in another color. You can define the color by yourself, so it's up to you. And then go ahead, join the ask. Join the ask. That means if this is the imbalance on the ask, you will notice that the price is going up. So we have still imbalances on the bid, and if you are looking to find a direction, that was one here, I've missed that because I was speaking. If you try to find a direction and it's on the bid, so take the reversals or the pullbacks and trade into the direction of the imbalance. It's everything on your chart. If you're a TradeFinder user, it's everything there. You simply should switch it on and display it here on the subchart on Bookmap. Now it's quite interesting to see 37.65. That was the pre-low today, pre-session low 37.64, and now we have an interesting level 37.65.64. You see how the market is for the first moment resisting this area 37.65. It's coming back, and on days like today, in comparison to the days 2-3 days before, when the market trends, it doesn't matter what you trade, you are always on the right side. If you are, in this case, if you are long, you know, it's not your indicator, it's not your method or whatever. If the market trends, then the market trends. The market does not look at what you have on your chart in order to find a direction or trade into a direction. But if on these days, on days like today here, for example, it's a little bit more, it's more difficult to understand what the market is doing. It's really difficult to understand what the market is doing. And the best way is simply to step back and then see where is the imbalance in the book. If you understand the dual auction, if you understand how the depth of market or order book is organized, then you can benefit of this, not that knowledge, because it's there, it costs you nothing. It's simply on the chart, but I know that is not a common tool. it's not known or maybe unnecessary or whatever. There are a lot of opinions here about that. Now what I see here is, what's that? Connection restored. Oh, I lost my connection here. Not sure, ladies and gentlemen, if you have the same situation here. I'm not sure you see this untraded or this offline signals here. Not sure if this is my DSL or internet or maybe Rithmic. Maybe they have restarted Rithmic to omit this delays or this the delays here. Not sure, but anyway, let's see what the market is doing here. Very nice sell stop run here. 500 contracts executed at 62. Not sure if this is counted in here. This is the data lag as well as here. If you have them on your chart, then it might really be something with the data provider. So another point I have to point you to is, with TradeFinder we have added an aggressor of market volume meter and an average liquidity meter. It's here on my chart, here on the lower right side on my chart, and it's really helpful. Believe me, some of you might not see the advantage of these meters, but they are really helpful because, as I mentioned, the order book is not so populated. If I look around my colleagues here, it's not really something which it's something what they are not using or not in the full functionality, or that what the DOM is giving you an information. And the meter here, market volume meter and the average liquidity meter, gives you a clue, gives you an idea why the market is so fast, why the market is so volatile. Look here, we have only 50 contracts on the first 10 levels. That means the first 10 levels means 10 ticks, that means 2.5 points. Let me as well, let me adjust it a little bit. So average liquidity from 40, that means 10 points, and I would like to measure the average liquidity of about a time of 20 seconds here. Still, we are still in a low liquidity. And if you don't have liquidity on either side, on ask or bid, then high volume simply hits the bid and lifts the offer very fast. And the consequence is that you can see that on your price ladder. You will see that on the price ladder. Maybe you're wondering why is the price ladder so wild, so nuts, so goes nuts today. So that's simply because the average liquidity in the book in traded in the order, in the order DOM is low and the market volume is high. That's simply the explanation. You have very nice explanation and reason why your trading tool, your price ladder, is so fast today. On some days when the market volume is low and the average liquidity is high, That means in last days we've seen 100, so in average. That means you will have a bit more time to relax and to see what's happening in the order book, or if you're doing it, or if you place a trade. It will give you a little bit more time to manage your trade, but with this speed here, it's really hard. So you go in, and in the next second you are stopped out because the market is so fast. That's the market volume meter, and that's the average liquidity meter, and the liquidity refers to bid, and the liquidity refers to the ask column here and the bid column. This is resting orders are on bid, and on ask, and in between in between they are, this is the market volume, or so-called aggressors. You see how it's good, how good it is to simply prepare yourself based on the institutional levels. By the way, there are institutional, this algos are, if they are used by this levels are used by algos, if hit or if triggered, they act as support and resistance. And by the way, if you are interested in our group and Discord room, we have great guys here, we have great traders in our room, which trade wheel, no paper account or whatever, options as well, futures. Then join our room on Discord, and all institution levels are posted by myself. They are updated automatically if you put them in the cloud notes, Bookmap's cloud notes. You don't need to do anything. If you want, I recommend, if you have the TradeFinder, so use the drawing tool, which are the price alerts here, and you can add, simply mark the levels of interest. Mark the levels of interest. That's amazing, and it's really easy. So you can clone, you can change the colors and so on. You can even get alerts here on the screen, sound alerts, or on Telegram. You see market volume is still high, and average liquidity is below average, far below average. If the market crashes, keep in mind watch the liquidity meter. You will see 40 in average. That means 40 contracts, 40 contracts per price level. And if the aggressor volume is so strong, if the pressure is high and strong, that will break all the prices in sub-seconds. So I can't comment anything here right now. Because there's nothing to comment from my side. market might find here a kind of support. So you see the bounce of 1, 2, maybe 3 times here. Went beyond the pre-low. Get a very nice stop run here. I'm not sure really is this because of the data failure. This area becomes significant to the market or for the market. See how precise the volume stops are working here, or works here. 1, 2, 3, 4. So waiting for Godot. I think this is going up here. This is really in a good level here at 37.65, which was giving support, even if they are trying to hit to retest the level here, 37.65. Let's see if they will challenge it again here. That wasn't bounce retest 4 times, or 1, 2, 3. I'm not sure if we should count that one. 3, 4 times here. And by the way, ladies and gentlemen, if you are interested and to see how we work, and we are really trading with non-lagging information. There's nothing what you see on the chart, on my chart. I mean, even if you watch Joe and other colleagues here in the room, there's nothing is lagging, nothing. So, you know, when we start as traders, we start with a candle chart. So at my times we have had, I had Ninja Trader version 7 and Sierra chart. So that was that were the main charting systems. No, today we have a lot of them, and of course you start with RSI, MACD, and so on and so on and so on. And all these indicators are lagging, so they are showing you the past. But you don't need to, because we can't predict anything, so we try to conduct, or we try to foreshadow or forecast the future based on the past. That's really hard sometimes. Yeah, it is in a rage right now, but there's no clarity here. There's no clarity what's going on, what will happen next. We have a good support at 65. We have a good support at 65. Keep in mind, by the way, we have had a gap on, oh gosh, I don't know when it was. Maybe on the October the 3rd. Keep in mind, go back October the 3rd, I think it was. There's a gap, and it was 36.90. But on the day after, that means October the 4th, the market went up for 140 points and didn't look back. And the gap theory is, if you are familiar with that the gaps are always closed. The question is now when. So the timing is crucial in this case. But keep in mind, there's still something smelling on 3700, 3690. There's still something open. Must not be today. Very nice spoofing here. Very nice pattern. You see this stairs. stairs here, of course. You see that. Trying to keep the price down. So I wouldn't like to look at an upside here. Yeah. Arno, thank you for the question. Arno is asking, will it also detect stops that were put in before my MBO data starts? So before you start Bookmap? No, because the point is, if you start Bookmap, the reason is following. When you start Bookmap and you have historical data, you have subscribed to historical data, then the gap between the open, when you start Bookmap, I mean not open, market open, but when you start Bookmap, and I missed a second trade here, very nice one here, and the last 24 hours are different datas. Bookmap is using the dxFeed data to fill the gap between the last shutdown of Bookmap and the next start of Bookmap. And that means if you start Bookmap at 10 o'clock your time, then everything will be loaded. Let's say your yes chart will be loaded, and the gap between yesterday when you closed, when you closed your Bookmap, and today will be filled with the dxFeed data. And as you know, the dxFeed data and as well OmniFeed data are not MBO data. They don't provide us MBO data. So if you start, now this is really challenged here. This is really challenged. When you start, TradeFinder will detect all stops possible when Rithmic data is when Rithmic data is available. Please simply mind the volume stops here, buy stop run, how precise they are working. And please, 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 ladies and gentlemen, don't tell me that this is not working. This is a very fine system and it's working all the time. You have to simply be patient, learn a little bit, yes, of course, and have screening experience to understand what's going on. So Arno is best. So I best leave running the whole week, because otherwise I will not have stops that will be triggered. Let's say above yesterday's high. That might be an option. So I'm really, Arno, I really don't know if this is really the best way, but that might be an option. Simply keep in mind, if you have historical data, it will be filled with dxFeed data, which is not MBO. It depends on what you are trading and what you want to achieve. What you want is every single stop you see on the chart important for you. So that means the stop which happened at, or which is executed at 4 o'clock European time in the morning, 4 o'clock in the morning European time. Don't know. Yeah, it could be an option, Arno. But I would suggest in your case discuss it with the developers. Very nicely, that's only available in TradeFinder. You learn a lot here. Look here, dynamic iceberg, which isn't partially filled at 58.25 and now seeking to get more contracts here at 58.25. It was filled, excuse me, at 60, I think it was 60, and then slipped down to 58.25. Hello, hey General, Mr. General, is there any way to convert the Bookmap institution level cloud nodes to NT8? I think so. Why not? I have to ask my friend at Lizard Traders. They can export levels in CSV file, and not sure why not. I'm not. Never give them a thought to do so, but why not? Question. Yes, but I have to ask first what we can do on that. So I'm not an NT8 expert. I think it could work, but not sure, but really not sure. We can export from NT into a CSV file, so that's for sure. But import a CSV file into NT8, I'm sure there's a way, but I think it must be programmed. There must be a kind of indicator built around, because Spot Gamma, Brent Kochuba, founder of Spot Gamma, is doing the same with NT data. So they built an add-on indicator for NT, and they are filling them with CSV data. The interesting point here, though, is that 58 is still open. You see this clear cut right now here at what it is, 1033 here. That means they are not interesting to be traded right now. The DID, the iceberg, is still open, but it can be closed at any point. It can be closed at any point, at any time here. So that means the algo is running and waiting, but if the price is not coming down, if the price doesn't trade towards this 58.25, then I think the algo will finish his DID, or this DID here. It will be finished, and that's all because the liquidity is gone. Let's see if they are retesting. And on the iceberg dome here, there's the iceberg dome, native dome, you see this good support. That's icebergs on the bid. Okay, algo was right, algo was patient. They want to get more, and they get more. Impressive guys. I think they will get 2000. Let's see, 2000. 50 is as well a good target, Mr. Captain, yes. Now see how they are luring for more and lowering the price. Look here. He wants to get whatever he can get. And the algo, it's simply impressive. Simply impressive to see how this algo knows how to trade this market. You can learn a lot of watching the market here and understanding the DIDs and this technique behind. Ah, come on, look here. 30 seconds. I have, after the session, I have to check my my settings in Rithmic, that's really it's annoying simply because that's not the best advertising for Rithmic right now. I remember this discussion here on Discord. Please, yeah, yes, FDH, we can have a look at ZB, but I haven't had a chance to adjust the settings for ZB. I'm sorry for that. I will do that the next days. I must update. For all of you, I've received the new really early beta, and we will release it next week, and that's a promise I'm making. But we are working very hard to clean it up, to fix those last, to make the last fixings on with bugs. But I haven't had time, simply since yesterday this week, to adjust it to ZB, to NQ, to YM, to my Amazon, Apple, Nvidia, Tesla, Microsoft, VXX, QQQ, VIX, SPY, of course. I've got it yesterday. I need time simply to do that, and as you know, I'm not sitting around here and watching simply these charts, but we are still discussing and we are testing and doing to deliver the best possible product for you. So, and that's, sorry, FDH, yes, I will do that as soon as possible, as well as ZB, because treasuries are extremely an interesting market. So if you trade treasuries, I would encourage you to do so. Use the utilize or use the TradeFinder for that, because it's remarkably, you will see how impressive it is on the treasuries. I must do everything, so we have added new functions in the TradeFinder and adjustments about not the volume stop, but as well as stop run and so on. And I have to look, because you look, you see ZB has a completely different resting liquidity. So we are dealing with 300, 400, 500 per price level here on the ZB, on the treasuries. That's, you know, the TradeFinder must be adjusted according to the traded volume and the incrementals of each instrument. So the incremental of the ES is in tick. That means 0.25 points. It's in quarter. And for the ZB, for the treasuries, for the ZB, we have 132 as an incremental, and so on. It must be adjusted according to incrementals and the traded volume in average. TradeFinder is not a tool where you can set it up like RSI or MACD or whatever, changing some few parameters and it's working, or it's going forward. No. TradeFinder is a precise tool, an analytic tool to find highs and lows. And when you understand it, when you understand the volume, the dependency between volume and liquidity, you will get the most of this analysis. You will boost your probability beyond 50%. That means at least 5 of 10 trades will be winners. So that means you get an advantage over the bank. You know, if you're in casino, the bank is always the winner. because the chance for you is with a 50-50 chance, I think 48-47%. You have advantages 52-53% against 47% of the gambler's side. So that means TradeFinder offers you the best probabilities in the market, but you must understand the dependency between aggressive volume and the resting liquidity, and then you can adjust it and fine-tune it, fine-adjust the TradeFinder for every single instrument. It works for cryptos, it works for shares, it works for futures, it works for treasuries, it works for commodities, it works for whatever. It works for everything, but you must be aware of the traded volume. And the nuisance the nuisance this day is simply because most traders are overwhelmed by the imagination that you need to know your volume and the traded liquidity of an instrument. That is really historical, because we start with candle charts, and no one talks about volume and liquidity on a candle chart. That's simply the way we are going, and then we are switching back on thinking, okay, it's not working my way, I'm not happy with that what I see on the charts, on the candle charts. I'm switching back to then, oh, Bookmap is a new chance to do something. And Bookmap is can be quite confusing for newcomers, for those of you who are new in this business, and then that might distract you more than the candle chart, of course, but it gives you the really good chance together with TradeFinder if you know what to look for. So FTH, please be patient. I will do so. Until next week. I'm sure I have everything set up here. Do we have to change adjustments according to market conditions? Is another question of FTH. Yes, because that means that the yes is relative. When you are given you are in Europe and you are trading ES in the morning, the pre-session, then the volume and liquidity is totally different than at 9:30 when the market starts, when the main session starts at 9:30 Eastern time. Then you have to change the settings, yes. With treasuries, I think it's not so complicated. I'm not sure it's not so complicated, because they have always the best time to trade treasuries is when they start, but I can't remember the times when they start, and that's maybe something you should see in the instrument description of the broker, of your broker's instrument description. Yes, we have to change the market conditions according to session time. If you're in Asian time, there might be different settings than European time and then US time. Yes. Treasury start at 1:20 p.m. Yeah, that might be, but then there are not many changes to do. So the treasuries are quite patient instruments, you know. They're working excellently, and I'm sorry to not show you the settings, because we are, let me say, underwater, and that's really the way, because we discussed and we produced this program, this add-on, first, as I mentioned, for ourselves, and then we are discussing the best implementation of what we know how to read the markets. It rotated back off this institutional level at, what was it, 57? I think it was 57. I'm not sure. Let me have a look in the room here. 37.57. 37.57. So I'm cloning that. Assigning a different color. So that was the level here, although this cover is not advantageous. Yeah, it was perfect on the 35.57 here. Very, very nice. And by the way, believe it or not, all these levels, the daily prep is in 1 hour before the market opens. I mean, before the RTH side time, before 9:30 Eastern time. All these numbers are in long before the market opens. There's nothing hindsight, nothing which happens inside, and we are talking then, and we are happy and cheering all these levels. No, they are in long before they open. FDH, you're welcome. So I will do my best to do the settings for ZB and for ZF as well, and other instruments. YM, I know there's a request in the YM channel, but simply that's not an, yeah, it might be an excuse, but it's so we are really busy to deliver the best possible product for you for trading. And as you can see simply on this part of the chart here, how lovely it works. You see this dynamic development, the sell stop run. That was the first stop of the market. Second one here. By the way, the iceberg is still sitting on 57. Joanne, yes, CL and GC are in the all the settings. Joanne and FDH and colleagues and are in the Discord room, in the, what is this called here? In the TradeFinder indicator settings channel. All the settings. What I'm doing, I have to update every one of them, and I will do so to update them. You can simply replicate the settings, of course, or you can as well, I would say, we have a TradeFinder settings, but it changed right now, so don't use it on our page, TTW-TradeFinder.com. Please go there, and we are using BMCS files, but this is something where we must be a little bit cautious now. We have changed the releases to the versions, and it will not work. It will not work. So take the settings in the Discord room, do them manually. You will learn a lot if you do so. They are trying hard here. So you see here there's no interest in the 83 based on the liquidity. That's an area here at 79. That's an area here around this institution level, and the two-day VWAP. That was the yesterday VWAP here around. That's a quite interesting area for the market. We have had nice high volume traded here, and you see that, by the way, on the volume bars here on the bottom of the chart. They need a break. They need a break here. My trade here, but it's very careful here. I'm break even. If it doesn't work, I'm not losing anything here. Ah, that's fast. That's really fast. So that was really fast. The idea was, or my trade was, to sell it here. You see how wild the market is. You see that? It's very hard to manage it. So I'm just protecting my money by going break even. If it works, and now look here, 73. I bet they are going to trade 73 here. Would be my bet here because of this cluster, volume cluster here. That's it, you see. The difference between today and other days is when the liquidity is really something above 100, and with low market volume you have simply time to manage your trade. Otherwise you will be stopped immediately. I mean, I mentioned that several times that TradeFinder is there to make you, give you confidence in yourself, in your trading and in your execution. So therefore we are saying relax and trade. Don't rush in, wait, be focused. Put your energy where your focus is, or where your focus is there will be energy. So don't rush. If you don't understand, keep your hands off, wait. TradeFinder will alert you, will show you the way, for sure. Now the POC jumped up from 70 to 80. That's always a bad time when the market is trying to find direction or needs maybe new information to find a new direction. But you see, it is anyway what you trade, and even if you're trading this very tight and sideways area, which is furious at the moment with this kind of average liquidity, and you see based on the volume, the participation in the market is not dictated by other time frame participants. That means professionals, algos, and so on. This is retail trading. We need a little bit more energy and power to boost to boost the price somewhere above or below. That's the information of the market volume and the average liquidity meter. Even if you are going sideways and you think the market is going then to trade or lower, then the information, it gives you a clear direction. It is at a moment, it's a stop here. If you want to do something, then sell or wait until you get on the bid. Until you get on the bid and signal which is meaningful, stop run for example, or whatever. I do not following news here, so I'm not sure what is happening outside. I just switched everything off to save resources here. You see, excuse me. Here you see now on the market volume 3,000, reading 3,000, and now look at your price ladder. Sell sweeps are dictating the market right now. I have to adjust that one as well. testing the POC again. $16.52. The best trade was the long here. There was a question of Mr. Humphrey. Best trade was here. Level, trade, DID, stop run, long. I was short here, but it was so furious that my break even was hit here. But the best trade is here, sell, stop, run. So I'm just waiting to see more evidence. Oh, excuse me. The next one was the, of course, yes, it's hindsight. So I'm sorry for that. It's hindsight. Here, 88. Short. Yeah, that's a fight here. 95, which is the gap here. But you see, I would like to wrap up here because we have another meeting here, and I would like to wrap it up what we saw today. So I've just presented you the new TradeFinder version 3.6, which comes with amazing features, and we did a lot of work, or invested a lot of work in those features. That means stop runs, which are really uniquely analyzed and determined based on order IDs. The volume stops, the market volume stops here, of course. And altogether putting it in the context of given levels, which are there every day, gives you an advantage in your trading probabilities. It enhances your trading probability above 50 and maybe a little bit more percent. You see, even it is hard to trade today, and today it's a hell of a ride here. So you see there's no liquidity there. I'm trying to show to tell everyone how important it is to understand an order book and to read the order book. The liquidity was extremely low, and it is extremely low, and the market volume is extremely high. And when those come together, there's a perfect ingredients for a high volatile day as it is today. Yeah, I'm doing my best. Question of the general is, are these webinars regular every Thursday, Walter? Yes, I'm doing my best to do this every Thursday when I'm around. Otherwise, and my colleagues are in the room. Look at John, look at Chuck, Bernie in the German room, and others, Philip, and others here in the room are extremely helpful, because they will give you insights of the market which you maybe don't see with other, let me say, methods. That's simply the way. What's the meaning of, so I would just want to answer two questions. Why is it that short? What's the meaning of average liquidity? You know, you must understand that the market is in dual auction. So we have a buyer and a seller, and the market is divided into resting liquidity and not resting liquidity, the market volume. And market volume and liquidity interacts. So average liquidity is the liquidity in the book, which means are the contracts on bid and contracts on ask. And please go to CME Wiki and read how the matching algo is matching those numbers or those contracts. with each other. The matching algo dictates the speed, and if you have nothing in the book and the pressure is high, you know how fast this electronical, what to say, machine or engine is working. That's average liquidity. The average liquidity in the book based on the 40 ticks or 40 levels in 4 years. That means 40 levels means 10 points. So based on the BBO 81, the BBO right is now is 81. So counting 81 back, down is 71 and up 91. So based on these levels, we are measuring the average liquidity, and we are giving a number here, or showing a number which gives you an idea how strong the market is, or how not strong, or how volatile the market is. It's important to understand. That's in my opinion, if you ask me, paramount to understand. I know that we are watching volume profile, market profile, and we see lines, and we see that, and we lean on that because we haven't been told anything others. We stuck on this stuff and candle charts and whatever you have on your candle charts, just to master the markets and to beat the market, to be better than markets. But be sure, if my opinion, it's my personal opinion, so don't want to offend anyone. This is not a religion. This is not an ideology. Everyone is on its own, so that's very, very clear. But to master the markets, you need a little bit more knowledge, and you should try to see what's behind the curtain in the markets, if you have the chance. You can trade, Humphrey, you can trade at every single liquidity, but when the liquidity drops below 50 and 40, it will not be possible to trade. I bet with you and everyone here in the room, you will see that when the market crashes, you will see 30, 20, 30, 40 on average liquidity, and then watch your price ladder, and you will immediately understand why it is not possible to trade. We have a very nice, decent number is maybe 100. I remember times 3, 4, 5 years ago in years where we had 500 on every tick in years. I'm talking about years. The treasuries are about 1,000, 700, 800 for ZB, for example. The 5 and 10 years have been at 3,000, 4,000 per tick. So I'm talking about the tick size. Then you can imagine what it means in the treasuries. And I remember the time where you have been sitting before in front of your screen and simply waiting until the price goes up 1 tick on 1 fraction of treasuries. And that is simply because they needed 5,000 buyers or sellers simply to press the price up or down. It was really hard, so I did 2 small trades because I missed a lot of trade. As I mentioned, I'm showing here the next release, and it's simply amazing, guys. Stay tuned. You will see get a lot of excellent, exciting market analysis, real time, nothing hindsight, nothing which will based on something which lags or non-lagging indicators, and that will give a great opportunity to trade, to understand what the market is doing. Why is the 500 contract at 83? These are not 500 contracts, this is a sweep. This is not a stop run, because this is, you know, there are differences. We differentiate between not only the stop runs, there are fine differences. Sweeps are algos who are sweeping through the book. have a look. You can do that very easily. And that's the great advantage of Bookmap. To see where the sweep happened. And you will see that the sweep was traded actively and passively, and they sold 500 contracts. They sold 500 contracts, 195 active and 305 passive. What I'm missing here? Yeah, that might be because I'm adjusted my. Okay, they sold. Algo sold 500 contracts. This is not a stop run. This is not a stop run. So you can short a sweep. No, you can't short a sweep. That's a sweep. You see that? Very nicely. Then you are saying you will short the sweep. The issue here, or the issue or the problem here is following. The sweeps are extremely fast. When you realize them, they are over. It is they are leaving a vacuum here. So you know it's impossible to catch a sweep extreme at the high or at the end. You must know a little bit more about sweeps. Sweeps are algo-driven events in the market with intention to sell 500. We don't know why they are selling 500 here. We don't know, simply. He might cover or not cover or whatever. And if you sell it, it might work here in this case. So, but you won't get the best price here, because that's so fast when you realize that the price jumps off or down. So try it, but I'm very suspicious if you can sell it. I would rely on other methods. You can use them as like icebergs. So I know there are other colleagues who are cheering the icebergs, but I'm a little bit more cautious. I did a video on icebergs. Please go to TTW-TradeFinder videos and watch the video about icebergs. Icebergs are additional market information, and there's no guarantee. There's no guarantee that they will work every time. So be very cautious of that. So the sweep, yes, it was a selling, and in this case, the market went down. Excuse me, went down here. And you're saying, okay, I can sell sweeps. Yes, you can sell sweeps in this case, or you can short sweeps. But to best this, wait until you get a sell stop run. The chances, the probabilities are higher to catch an exhaustion point in the market than chasing icebergs or chasing sweeps or whatever. You know, all this information on chart are like puzzle pieces, and you should understand how to put all these puzzle pieces together to get a picture. There's no need to rush, and that's what I'm trying desperately to say. There's no need to rush. Look here, because the market talks to you. It's a stop run. It's an exhaustion point. We have the IDs here, or we have development icebergs. These algos are smarter than we are. I'm excuse if someone is smarter, so I don't won't say that, but they are smarter than we are. So let's do following follow the rabbit here in this, on this chart, and wait. Put all these pieces together and take action when you think it's the best chance for you to get something out of the market, or to get to the market is going in your favor. Okay, ladies and gentlemen, thank you for being with me, with us. Thank you, Philip. Thank you, colleagues here in the Discord room. We are every day in the Discord room, so please join us in the Discord room. If I'm not around, I apologize, but John is there, Moby is there, David is there, Chuck as well, and in the after when the market starts. So join these great colleagues, and Rhino, of course. If you want to discuss with them, if I'm not there, then that's not intentional. That's simply because I'm busy here. I'm here in my office, and see your questions. I will answer your question, respond to what you have. I promise you, you won't find better tools than the TradeFinder, the market. However, it takes a little bit time to get familiar with the TradeFinder, but we will do, and we have a lot of we have a lot of videos. We'll do wiki. We have a lot of descriptions. We have a room here. We have yes, here in Discord. So you are not alone if you are not sure how this stuff here works. Take your time and be patient. The release for the new release will be, yes, next week. I'm sure it will be next week. Thank you guys. Thank you very much. So I'm leaving my chart on in the Discord room, and I will close YouTube, and I will be happy for your comments, and please leave a like. Thank you. Bye bye.